In today's show, it is all about growth ETFs. So grab yourself a brew and we will start right now. An exchange-traded fund, or ETF, is one of the best ways to achieve some diversification in your portfolio. An ETF is, of course, a fund consisting of many companies in the same, or more often, different sectors to provide more stability to your investment while also delivering a solid growth or dividend opportunity. Today, we have come up with 6 fantastic Canadian growth ETFs, which should have solid performances in 2022. So, in no particular order, we will start with the first growth ETF, which is BMO S&P TSX Equal Weight Oil Gas Index, which has a ticker of ZEO. They maintain a reflection of the selective equal weight Canadian Oil and Gas Index. Their management fee is 0.55%. Now, their 52-week return on investment, or ROI, was an impressive, get this, 57.94%. If that wasn't enough, they also pay a moderate dividend with a half-decent yield of 3.21%. Keep in mind the dividend payout is included in the 57.94%. However, that is still pretty impressive if you ask me. Now, ZEO has holdings within their ETF that include Enbridge, Suncor, Imperial Oil, and many other major companies within the energy sector. They are definitely a total winner in my opinion. Up next for our second growth ETF of the day, we have Harvest Tech Achievers Growth and Income, which has a ticker of HTA. They maintain an equal weight portfolio of 20 large cap technology companies. Their management fee is a little bit higher. It's at 0.85%. Their 52-week return on investment, so ROI once again, was a pretty solid 39.35%. Of course, in addition to this, they also pay a respectable dividend with a pretty nice yield of 4.27%. This ETF is essentially a hybrid growth dividend stock, and for that reason, very, very cool. Now, interestingly enough, when you look at the companies found in this ETF, a lot of them are also in the various metaverse ETFs. For example, you can find NVIDIA, AMD, Apple, Microsoft, and Adobe, just to name a few in this ETF. If you are bullish on the metaverse, this may be an ETF for you. Moving on to our third ETF, BMO returns for their second appearance with their BMO Equal Weight US Bank ETF, which has the ticker of ZBK. I really do love the BMO ETFs, so I am not surprised that they have multiple entries on our list today. This ETF was designed to replicate the performance of the selective equal weight US Bank Index. Their management fee is a nice and low 0.35%. Their 52-week ROI was 39%. Of course, in addition to this, they also pay a small dividend with a modest yield of 1.91%. They have holdings within the ETF that include Wells Fargo, Bank of America, Goldman Sachs, and other major US bank sector companies. These are blue chip American assets that we can own in Canadian dollars. I do like the sound of that. CDRs are awesome, but we don't yet have a CDR for an ETF. For our fourth Canadian ETF of the day, we have iShares S&P TSX Capped Energy Index ETF XEG. Of course, the ticker for this one is, well, XEG. They have a focus on securing long-term capital growth by replicating the performance of the S&P TSX Capped Energy Index. Their management fee is 0.55%. Their 52-week ROI was an absolutely whopping, wait for it some more, 82.73%. I am very bullish on the energy and oil sectors right now, so I have some high hopes to see this amazing ETF continue delighting us with a great ROI. In addition to this mind-staggering ROI, they also pay a small dividend with a low yield of 1.30%. As for their holdings, there is one small concern, and that is that Suncor and Canadian National Resources Limited make up just shy of 50% of their holdings. Normally, for diversification's sake, you want to keep your individual holdings to 15% or less. However, both Suncor and Canadian National Resources are very solid blue chip stocks. We still have 2 ETFs left, so let's move on to our final BMO ETF of the day, which is the BMO S&P TSX Equal Weight Banks Index ETF, and it comes with the ticker ZEB. This ETF tracks the selective Equal Weights Canada Banks Index. Their management fee is 0.55%. Their 52-week ROI was 35.55%. In addition to this, they also pay a medium dividend with a moderate yield of 3.08%. Once again, we are boarding on a growth dividend hybrid stock. As for their holdings, they have an equal weight investment in the big 6 Canadian banks. And with that, we are now ready to look at our final Canadian growth ETF, and that is the NBI Global Private Equity ETF, and they hold the ticker NGPE. They maintain a reflection of the Morningstar PitchBook Developed Markets Listed Private Equity Select Index. Holy banana bread, try to fit that on a letterhead. Their management fee is 0.55%. Their 52-week ROI was 37.73%. In addition to this, they also pay a small dividend with a low yield of 0.75%. In case it wasn't obvious, the dividends all of our ETFs produced today have already accounted for that management fee. So NGPE's holdings include Blackstone Group, Apollo Global Asset, and other equity class companies. It should go without saying that these 6 Canadian growth ETFs may be great investments for your portfolio. However, always take the information I bring to you as a place to start your own research. Always do your due diligence and or consult a financial advisor for additional assistance. In my links below, we do have a link for my free weekly email list. I will be starting to add exclusive content to that list, so definitely sign up for that if you are interested in that. While you are down there, also be sure to hit like if you enjoyed my content today. If you wish to see more content like this, then demolish that subscribe button and click on the little bell so you are first to know when a new video drops. If you are looking for other ways to support the channel, then definitely check out my affiliate links below. I have some really great ones from Wealthsimple to ShakePay to EQ Bank, and of course lots of really good books that are great for getting you going on your investing journey. I definitely want to thank you for your time today, and once again I bid you a fond adieu.